There we go. That's weird.
Yeah. It was all my fault. I switched from a Surface to an iPad. Should have known from the beginning.
It's fine. All right. I guess. Oh, perfect. All right. I guess let's just dive right in. So, you are an equity investor. So, and I think I read your blog. You said you started since you're like 12. So, I guess can you talk about that?
Okay, so started when I was 12. So because I'm so old now, that was back in 2008, pretty much during the Great Financial Crisis. Exactly, kind of was young, like you and a lot of other people are, and just kind of saw my dad was the CIO of a Fortune 500 company at the time, so he had company stock and was just watching a good bit of it go down the drain, and I saw him watching Mad Money one time on CNBC and asked him about it, and got started. Just kind of picked a company I liked, and luckily it was a home run, so that got me hooked.
What type of investments do you make? Are you just buy stocks? Do you go into options? You go into futures? What types do you go into?
So I'm mainly equities. I do ETFs, and I also do options as well.
Okay.
Less options now. I've had a string of bad luck with them, but
Same with me. Yeah, but yeah, go ahead, sir. But yeah, so what type of strategies do you use? Do you just pick? Do you use a technical analysis, fundamental analysis, or do you use a bit of both?
So it's a little bit of you got to do a hybrid approach, in my opinion. I know people that are very deep value. I know people that purely trade on technicals. It's a little bit of both. I typically try and do thematic approaches. So I pick a theme that I like. It could be something. My current theme right now is the dislocations in the new economy. So currently that's with retail, malls are shutting down. What's the next step for retail? And then going into you have rising wages right now, so that goes and affects food sector, and then playing some other types of plays. I'm a big fan of screeners, so I'll do a couple screens on FinViz or through my broker, find a couple ideas that meet certain criteria, fundamentally look at them, develop the idea, look at the 10Ks, look at the financials, look a little bit into the industry. Is it interesting? Go into the company. Then once I figured out, okay, this is a good investment, then technicals come in for entry and exit, really, and then sizing. So, it's crossing the 200-day to the downside. Typically means that the stock's going to drop. Maybe we lighten up a little bit, stuff like that.
And then your option strategy, what types do you do? Do you do like vertical spreads? Do you use a margin account, or you just simply buy calls and puts?
So for most brokers, you do have to go and use a margin account just to go and say that you have enough capital to go and back up the trades that you're doing. Typically, I do just straight calls and puts. I'm a big fan of selling calls and selling puts, especially to go and collect premium, really. And I love positive theta. I hate having theta decay.
Yeah.
So if you know what that is, that at my no, I had no idea what theta decay was at that point. I mean, I was just starting to get into the gritty details of theta decay over the past 2 years as I started trading options. So
I had a good streak to begin with, and then I found out what theta was, and theta kills you so much if you don't reach
theta. My favorite things to do are on shorts, sell puts against it, collect theta, or on my long sell calls when I can and just collect premium the entire time. There's not and selling vol. I love selling vol. One of my core shorts right now is shorting the VXX because
it's still the economy's doing so great. It's really really good short that.
Oh, I love it because I love my good friend Jeremy always tells me this. He always says, the thing with shorting volatility is time's on your side. Time is infinite, and the exuberance about a single event is only for a short time.
Yeah.
So.
Now, when you sell calls and puts, are they naked or they're vertical? They're covered.
Depends. Normally, I don't use options a whole lot as a single bet. I normally use them to go in ladder position. So sometimes calls on with stock and then doing covers as well. Not necessarily full covers, maybe like a half covered. So technically naked but it's a hybrid.
It's hybrid. Okay, so it's not as infinite as your loss of
No, I may be long 20 shares of stock and I go and sell a call against it. Is it completely naked? No. Is it completely covered? No. So.
And then were you a future trader as well or no?
No, but I mean, I watch every single asset class closely because you kind of have to nowadays. You know, I watch futures at night mainly and Forex kind of throughout the day, but I like to stick to what I know, which is equities.
Yeah, I know you're a college student now, so what's your future after this? What do you think about doing work in Wall Street, starting your own firm, or?
Currently it's going to be starting my own firm maybe down the road. I have a couple of close friends that want to do something later on in life. Actually, my friend Julian Marchese has his own firm, and that's doing really, really well. Currently, it's Quant Strategy. Currently looking at joining a firm. I have I'm spending a week at a hedge fund that really likes me called Weiss Multi-Strat Advisors. Hopefully going to intern with them next summer and hopefully get an offer. But probably going to go to a firm for a couple of years because that's where you learn a whole lot, and then maybe venture off and do my own thing.
Out of curiosity, what's your stance on the market now? I mean, it's been doing really great these past few months, but I know like last month it's been a little bit kind of like up in the air due to the French election, pretty much due to the Trump's first 100 days. It didn't pan out so well. So I know he released his tax cuts today, and the market kind of reacted to it. So what's your opinion on it?
So my opinion of the market as a whole is I'm positive on it. I think the U.S. is still, you know, the best place to go and be when you're going in, you know, going and allocating assets. I like EM too. I like emerging markets a lot, but overall, I'm a big fan of the U.S. markets. I have most of about half my portfolio was in just the S&P, mainly because again, I am a student, so I'm in the middle of exams right now, so it's hard to go in, you know, always be trading or, you know, always be monitoring things. So I like that, but I have some trades on that have been working terribly right now, but
Yeah.
short Caterpillar and long KSU. And if you, for the past 48 hours, if you paid attention,
Oh, Caterpillar is really great. Yeah. Mm-hmm. It went 7%.
I'm short it.
Oh.
I'm short it.
Oh, okay. Okay. Yeah.
And then off of the NAFTA talks, my long that I have against it called Kansas City Southern got hit because half the revs come from Mexico. But that's more of a trade that bets on mean reversion to Trump. I don't think Caterpillar's going to do as well because they're not going to build the wall. I think the NAFTA thing is a no situation. I don't think we're going to quit NAFTA. But overall, I think we've got great earnings growth right now. I mean, we're at the highest earnings beats that we have been in the last 5 years. And we've got great economic tailwinds. I mean, you have the labor market that's kind of tight right now. I won't say full employment. I won't say it's super tight. We still have some slack. A major tailwind. You have real interest rates that are positive. You can't say that about some other developed economies. And we have, for all intents and purposes, a decent political standpoint. I mean, Trump has come out and been what I call the president of mean reversion. He starts off on one end saying, we're going to ban all Muslims from entering the country, and that's kind of reverted. It was, I'm going to build the wall. Now that's kind of off the table. I'm going to quit NAFTA. He's probably going to walk that back too. So, and all in all, he's not as bad as we could have gotten. And when you go and you sum up all those parts together, you go, the U.S. is the best place to be. You know, you don't have negative interest rates like Japan with a declining population in terms of demographics. You don't have French elections. You don't have to worry about countries leaving your trade union like Germany. And then with the UK, again, political headwinds as well as some economic headwinds as well. So U.S. is still the best place to be.
I guess when I saw you an article, I think for like young investors, something like that. So how did you get in there? I mean, was there some sort of trade you made that really made you stand out, or?
That's kind of been the story of my investing career. Has been always I have a lot. I was lucky to discover social media at a young standpoint when I was investing. This was like when I was in high school, like a freshman, so 2013, and I was on Twitter, which is huge right now in the finance industry because I've met a lot of people. I've gotten great opportunities and met a lot of great people through Twitter, and it was I found a little group of people that were like me that were investing in the markets and were active in the markets. And I was like, I'd start talking to them. They're like, hey, we have this club. Why don't you join it? And then a couple of us got featured on Business Insider. Then that led to CNBC appearances every year and all that stuff like that. So it's just kind of been like he's one of the young up and coming people in finance. If you ever need an article about that stuff, go to him type thing. It's fun. It's fun, not gonna lie, but
I was going to ask. Oh, sorry. Hold on. What was my question? Rick, did you have a question or no? Negative? Right? No. There's one in my mind. I just forgot of something. Sorry. What was it?
I mean, I'm completely, and I say this to everyone that interviews me, I'm completely transparent. If there's questions you want to know about anything, you can go ahead and ask it. I'll tell you about losses. I'll tell you about gains. I'll tell you about what.
Oh, yeah. Yeah. So
it
where's
doesn't matter.
Oh, yeah. So what are some things, I guess, like your biggest loss and like what can you take away from it? Like,
Ooh. Biggest. Okay. So I'll go and ask this. I'll re-ask the question for you. Biggest monetary loss or biggest percentage loss? Because those are completely different things.
I would do
my accounts varied. Monetary?
Yeah, monetary.
Ooh. That's actually a hard one to accurately judge because they've all been about the same. It's just they've always been a different percentage in my portfolio.
Okay.
The most disappointing and the hardest hitting loss was probably Michael Kors.
What's Michael Kors?
And I say that because Michael Kors.
Mm-hmm.
It's a fashion company. Ticker is KORS.
Okay. I think I've heard of them. There.
Yeah, and so I rode them. They were one of the hottest names in fashion, and I rode them from the low 60 to like 112, which was their all-time high. And one of those doubled your investments. Was on track, was listening to the conference calls, everything was going great. And then their margins started to slip, and I didn't realize that at the time, but really paying attention to how financials changed was huge with that company, because I would have told you margins are slipping. That means net income slipping, despite the fact that they still don't have any debt, but they didn't at the time. Even though they had great revenues, the financials were still falling apart, and you wouldn't know it. So, and I rode them all the way down from, and I took some off at the top. I rode them down to like 75, added more, and then finally got out of the position at 55. And I can't even tell you where they're at right now unless I looked it up.
Yeah.
So, I mean, it was just one of those soul crushing things where I watched it go down, down, and down, and just kept saying, business is still sound. Business is still sound. But it was one of those things that taught me a huge lesson in that, understanding to know the difference between revs and net income, to understand margins, to be able to go in, like when you build a model, to really make sure that you pay attention to rate of change of financials between quarters and between years. How did Q1 this year go and deal by Q1 last year, which, for things like Caterpillar's earnings, it was, yeah, they had a massive earnings beat, but they went and they cut 10,000 people, and you go and you look at GAAP versus non-GAAP, and it goes from being down 2% to being up 6%. And that's huge, as well as with Chipotle, which is another one of my shorts. As you can see, my shorts have been doing terrible.
yeah. Well, they did ramp pretty well again.
With Chipotle, it was 17% same-store sales comp due when the previous quarter a year ago was down 26%. So so it's understanding things like that where you really learn about companies and how earnings really matter. So that was that was a loss that I took with time and stride, because it was, at the time, it hurt so much. Pride really took a beating there, but I've learned so many lessons from that have helped me along the way.
I had a similar thing with NVIDIA. It was, I think, about like at 60. And I kept buying up because I thought it was like unstoppable. And it did pretty well for earnings. But then I guess people thought it was overvalued. And some analysts, they said that it's not a good stock. It's at 100. But the highest it was at 120. I think my average cost was about 100 now. So Yeah, I'm kind of broke even with that.
And those are things that at the time suck, but you learn so much. Like I've learned everything. Options was one of the big things where like I learned from every single loss, and I've had. I mean, options have been the single worst bit of the last 2 years for me. Like if I wouldn't have traded an option in my life, I would have been up the past 2 years. Instead, I'm down. My long-term track record is still great, but it's one of those things where I kept taking $50 losses every couple months, and those added up fast.
Cool. What about I guess your best trade? What did you learn from that?
Best trade. Man, in raw percentage terms, that'd have to be like JP Morgan. And this was
Nice. Before the election?
This was what?
Before the election?
I had bought it at 33.
Oh, nice.
When the London whale thing came out, and this was one of those. My account was super small at the time, and I was so happy because I could get 6 shares at $33. That was a big deal, and it was one of those. I held it up until before the election where I went almost to cash. Confidency problem as well. I mean, it was up there at like 72. So that's probably the big that was a 2-bagger. So that was a great one. Actually, the first stock I ever picked went up 250% because it got bought out.
Nice. Was that a pharmaceutical company or just what type of company was it?
Financial.
Oh, financial. I'm sorry.
Did you get that?
Which company was this? The financial company? What type of company was this again?
This was the first company was a clothing company called Volcom. They're an action sports clothing company. They got bought up by Puma like a year and a half after I bought them, which was fantastic.
Nice.
And one of the worst things that ever happened to me, because my first stock that I ever picked, made 250%. How do you learn anything from lucking out like that?
Nice. I guess we kind of touched a little upon this, but I guess we need to go more in depth. I guess what are some main key components you see in a company, like when you invest it or when you want to short it?
So shorting is completely different than going long. In a way, it is the complete opposite, but shorting for me is one of those things where you kind of have to look at the company, and I tend to look long term, and you kind of have to sit there and go, if I was long, would I be making excuses for these reasons? Because when you've been investing for a while, and I've surpassed my 8-year anniversary now, whenever there's a bad quarter or a quarter that wasn't up to expectations, you always make excuses for why it was bad. I was long Starbucks for forever. I'm not a huge fan of the name right now. I'd almost short it if I didn't love the company still so much, because I'd look at reasons like, same store sales missed last quarter, and if I was long, I'd say, well, it's a tough environment, political stuff and all that stuff. But if I was short, I'd say, well, obviously people aren't spending as much there. Why? Why aren't they spending as much there? Start digging deep into it. Is it the menu items? Is it because they've overexpanded? Is it because they're not up to their game anymore? Stuff like that. Like with Chipotle, it was the reason why I shorted it was I sat there and I said, it's still a fundamental business. I will, I think for the long term, Chipotle will be higher. But it's going to take time to turn around things like margins. Their margins took a massive hit, and they're a company that relies on cheap commodity prices. And with a strong dollar, you do not get necessarily cheap commodity prices. So you have that. You have rising wages. I mean, they've raised wages so far over the past 2 years. Their wage cost has gone up almost 20%. And that's tough in a low margin business like food. So I sat there and I said, margins are decreasing. So that means you filter down through your income statement and you go, cash flows are going to start going down. And they're a company that has zero debt. So if they start having lower cash flows, eventually they're going to have to take on debt to start, continue having lower sales because no one will go eat there. and it just keeps on going through. On the long side, I like companies where I can see some type of growth. I tend to do very well when it comes to clothing companies and when it comes to retail. Under Armour, for example, was one that I had held for forever, and I made like 120% on that one too. Like it's just one of those names where I tend to get trends in spaces right really well. A company that I really like right now is Hostess, the company that makes Twinkies, and
Yeah.
I actually own warrants. They're half share warrants, so for every warrant I have, it's equal to a half a share, and the warrants are a completely different type of option. But I love this story because it's one of those classic things where they have 96% brand loyalty. You can't find that anywhere else. You can't find, another product where you have 96% of people know what that product is or know the company. And it's one of these things where they went bankrupt and they came out of bankruptcy via private equity and an IPO. And what the private equity company did was they restructured them, got rid of all the debt, got rid of all the nastiness. So I said, I get a great company with zero debt that's now leaner than they've ever been. And they restructured how they did distribution, where it used to be Hostess trucks used to go and deliver the food. Now we're part of wholesalers that will go and take all the pallets on their truck, and we can fit more stuff on there that gets delivered with all the rest of the grocery store products. And that go and move their margins up dramatically. And it's one of these stories where you have this great company where they've improved margins and all this stuff like that. And the one big thing that needs to happen is they need to grow to market share. When they went bankrupt in 2013, they had 22.5% of the market share of the snack foods group. Currently, they're at 17.5% market share. And you sit back and you go, well, this is the people that buy Hostess are very loyal and all of this, and they've been off the market for a while. All they really need to do is regain that market share. You do a quick model of market share growth to go and get to there. Maybe it's 3, I have it modeled out for 3 years because they've been growing market share about 50 to 100% each half year since they've re-IPO'd. And you sit there and you go and you figure out what those revs are, and then you go through margins to get net income, to get free cash flow, which is how I like to value things. And I go, in 2 years, if they have 20% of the market share, so that's only 3 more basis points than what they're at, they will be up to approximately, by my estimates and using the industry free cash flow standard of about 10 times free cash flow, they'll be at 24 a share. They're currently at 16. And the warrants I own pretty much are whatever percentage. If the stock moves 1%, the warrants move 3%. So I figure, with a 50% return pretty much from where the stock price is right now, I'll get 150% on the warrants. And that's one of those plays where you just sit back and you go, well, I love this. Why would you not like it? Everything's fine. I just need to sit here and wait. And those are plays that I love to death, where it's one of those, I know it's going to happen. I just need to sit back and let everyone else figure it out. Like oil last year when I bought XLE at 55 because I sat there and I said, oil's at $30 a barrel. Is it going to be higher in a year to 2 years? I said, yes. I didn't even pick a price. And I went on, you can look this up on TV if you Google my name. My trade on CNBC last May will be on there where I laddered it with an option. And I sold a lot at like 74 because and the whole basis of the trade was oil's going to go higher and I get paid 3% in the meantime. Put it at a 5% allocation of the portfolio and let it sit. And it worked out.
Cool.
So I love these ideas where there's a particular cable company in the Caribbean that I really like that sells at a 50% discount. And it's one of those, again, where it's just kind of, you do the numbers and you just figure out that eventually people like analysts are going to go and catch up to it. And when they do, that's when you get out because you're right. And when analysts normally get bullish on something or or if they all were at a hold, so now they're all at buys, that's normally when you go, okay, everyone's caught on to it. I need to get out.
Please. Oh, that's good. All right. Cool. Thank you so much. I guess, yeah,
No
we'll wrap it up. Want to take a quick photo or, yeah, you good?
Actually, we probably should. We probably should.
Probably should. Just. Thank you so much. Can we take a quick photo, by the way?
Oh, of course. Yeah.
Really, when is the band room closed? It's not closed now, right?
It should be closed now.
Okay, because yesterday sucked.
Oh.
Michelle, there's. Yes, man.
Okay, ready?
Oh, let's see. Click on it.
Yeah.
As long as no one talks.
Okay,
it's
He's
all
right
good.
there. He's right there. Cool. Thank you. I tried not to say anything. Okay, great.
Thanks so much. All right, thanks so much for speaking. That's really good talk.
No problem. Anytime.
Yeah. All right, I'll see you.
All right. Have a good one.